please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, a very good morning. Watching Trading Hour on CNBC TV 18. I'm Ekta Batra. With me is Prashant Nair, and it's turning out to be a little... Hi, a very good morning. Watching Trading Hour on CNBC TV 18. I'm Ekta Batra. With me is Prashant Nair, and it's turning out to be a little bit of a subdued start for us. Yes, we have recovered from the day's low, but overall it seems as though the Nifty is just about marking time at around 10,800. So like you can see on your screen, absolutely flat. And the Midcap index, a tad bit of an underperformance with a sluggish advanced decline ratio, you'd have to say. But a lot of stocks in focus today. There is HPCL, IOC, BPCL, all of these stocks which are bouncing around because of the kind of softness that we've seen in crude prices. Separately, ICICI Bank, which is holding up today, and something like an idea. And also from the broader markets, we have PC Jewelers, Manpasand. These stocks continue to be in focus on account of the volatility that we've seen in these counters on the back of all of the news flow. Hi, Prashant.
Ekta, hi. So, I think undoubtedly the big story is the fall in oil prices, which we've seen on Friday, continue this morning in Asia as well. So, we saw another 2% fall today. And that would be good news for those who are starting to worry that maybe things are starting to look a little worse off for emerging markets, especially after what happened with the dollar. The dollar, the week before last, at least as we closed the week before last, it was looking like it was heading south. But with the two central bank decisions, which is the Fed and the ECB, the dollar actually closed with what is technically a bullish kind of indicator, a bullish outside week for the dollar index, and that's not good news for emerging market currencies. But on balance, off balance, you've got oil, which is corrected. And corrected how? Almost all of it actually on Friday and this morning, continuing this morning today as well. As Ekta pointed out, the immediate impact is fell through in oil companies, aviation stocks, and a multitude of other sectors. But it is broadly positive for the market and at an aggregate as well. So it's, fingers crossed. Let's see if this sustains. OPEC meeting over the weekend. Friday and Saturday is when the OPEC will meet, and there are expectations that we will see a big shift in their policy with higher output. Output has been curbed, remember, for the last 18 months or so, and it may be that policy may be reversed, which may lead to more pressure for oil prices. Good news for India. We take a quick look at what the market is doing. 2.5 odd point change higher on the Nifty, which means we're a long way off the lows. The Midcap index is still down about 0.25% though, but that has also come up from the low point of the day. Sudarshan Sukhani of S2Analytics.com is with us. Sudarshan, good morning. Good to have you here. Your sense and whether we will continue this rebound or this will get sold into 10,820 on the Nifty spot right now.
Yeah, good morning again. See, I think we'll continue with the rebound. In the morning, I explained that the rebound is imminent. That sign came on Friday when we dipped it below 10,750 and then bounced back in the last 1.5 hours. That was a spring that told us that the dips are being bought by smart money. And that message continues today. So the trade is to be long in the Nifty and stay long. The Nifty Bank is not at the same level, so we can as well ignore it. Instead of Nifty Bank, we can look at ICICI Bank to buy. But for the Nifty, you should be long in this. This is a rebound, and this rebound has come after a big dip on Friday and a test of that dip today. So it seems we are ready to go up.
Okay, and what are the stocks that you'd be recommending in such a likely move?
Well, there are favorites, and I think that's what we should be buying today. M&M is a buying opportunity. It's been an outperformer, and that should continue. Focus on outperformers today. And then the second is United Breweries, another stock where a sustained up move is visible. Both the stocks are available for buying intraday as well as for carrying forward. One stock for short selling, and that is CESC. It's breaking support levels, moving lower. So for an intraday short, it seems suitable, but broadly stay on the long side.
Thank you for that, Sudarshan. Appreciate you joining in when we speak again soon. We have Rahul Shah on futures and options trades from Motilal Oswal. Rahul, good morning. What would you be putting out as trades?
Hi, good morning. I think obviously winners are financials. I think we've seen financials have been doing quite well in this series. So I believe that Bank Nifty has a major support at 26,000 level, and where is the maximum open interest of puts. So and from that space, I have two financial stocks to be on a long side. So I would go long on IndusInd Bank. We've seen this stock slowly and steadily moving, inching up higher and onwards in last few series, and trading at near-term 52-week highs. So I would buy Indus with a stop loss of 1930 and target of 2020. Second is, interestingly, NBFC also saw a good bounce back from the lower levels, and a lot of stocks again from the lower levels have started showing some strengths. In that space, Piramal Enterprises are buy. We saw a 2.5% up move on Friday, plus longs built up on Piramal Enterprise. Today also stock is up smartly. So I could buy Piramal with a stop loss of 2490 and a target of 2600. And thirdly, HPCL is a buy. We've seen a stock moving around 300 to 315 levels and showing some sign of improvement. So I would go long on HPCL with a stop loss of 315 and target of 335.
Okay, all right, Rahul, we're going to leave it on that note. Thanks very much for joining in. So those are some F&O strategies. But let's cut across to the Interim Finance Minister at the 6th Annual Growth Net Summit. Let's listen in to him.
We have a country still living in the 70s slogan where the home is still not sorted out. We have a country aspiring for good roads, electricity in their home, clean drinking water. And at the same time, we have another third imperative, which I believe is the challenge before all of us today, is the imperative of engaging with probably internet, engaging with the modern technological evolutions, robotics, Internet of Things, new ways of 3D manufacturing or artificial intelligence. So we are living in three worlds simultaneously, addressing challenges before the country in each one of the three worlds, trying to meet the aspirations of 1 billion people, many of whom for 3 generations, if not more, have been deprived even of basic sustenance living. While we can say that we are better off than many other parts of the world, personally I don't see any satisfaction in that. It does not give me any joy to compare myself with somebody who's worse off. I would rather benchmark to the best in the world. And therefore, when this government looked at growth, looked at what needs to be done to address these challenges, we looked at all the 3 segments, addressing the issue of housing, which is a priority issue before the country, ensuring connectivity across the country, and connectivity would not only mean better lives, better lifestyles, it would mean more business, growth, engagement with the world for our exports. And connectivity would obviously mean connectivity of roads, railways, airlines, seaways, airwaves. We've worked through the last 4 years to ensure we can strengthen our power sector and every element of the value chain of the power sector, addressing things not as they came, addressing things not in jerks to address what is the immediate problem at hand, but addressing it in a systematic manner from the base, prioritizing what needs to be done. Unless we have fuel, we can't run our power plants. Unless we generate enough power, we won't have anything to transmit. But
okay, that is the Finance Minister Piyush Goyal. I mean, in the last bit, talking about the track record of the government in the power sector. I mean, that's a ministry that Mr. Goyal looked at closely for some time. We have, I mean, back to the market. So recovery continuing, 5 points higher now, 10,822, but a long way off from the lows of the day. Ideas, the stock that we're talking about, it's higher. There are reports that the Department of Telecom is likely to give a go-ahead for the merger with Vodafone. I mean, so idea is a long way off. It spent so much time around that 90, 100 rupee levels, and then the bottom fell out. 62 now is where idea is at. Reema, what would this approval mean, and what should we expect?
Well, we are expecting the DOT to give a conditional nod for the Idea-Vodafone merger. If not today, then at least sometime this week. What Idea will have to do is give a bank guarantee of 2,100 crore on account of one-time spectrum fee for the excess spectrum, for the administered spectrum. And over and above that, take an undertaking that in the future, whatever liabilities will come through on account of the merged entity, Idea will be covering. Once this merger comes through, Manoj Sinha signs on that dotted line, it will create India's largest telecom company, and the combined entity will be better positioned to fight off the competitive pressures. In fact, the cutthroat competition in the industry has taken down the industry revenues by more than 20% from its peak levels. In the last 6 quarters, Idea has been reporting losses. The pricing war is only intensified in the last few quarters, with Jio now entering the postpaid segment as well. As you rightly pointed out, the stock has also taken a big beating. The high was close to about 120 rupees. This is after the merger was announced, and then it went all the way down to the 51 rupee mark in May, and since then it's seen a bit of a recovery. The Idea-Vodafone merger was first announced in January 2017. At that point, the revenue market share of the combined entity would have been close to 43%, and now on account of the Jio entrance, that market share has come down to close to about 37.5%. It will still be the market leader. Bharti will be close to about 30%, while Jio has managed to improve its market share to close to about 25.6%. But these, of course, are as reported by TRAI. Most of the analysts adjust the revenues, and that figure would move it a bit. But the big challenges faced by the combined entity, one will be the very high debt sitting on the company's books. Even after the merged entity, debt will be close to 1.1 trillion rupees. Its net debt to EBITDA on an adjusted basis will be close to about 9x for the year gone by. Industry revenues are on a decline, and both companies have trailed market leader Bharti as well as Jio in terms of the capex spends in upgrading to the 4G spectrum and providing the voltage services. So the companies will need to put in a lot of money in order to ramp up their 4G presence and coverage at a time when the debt is very high. The key that the street will watch with respect to the merged entity will be the kind of synergies they can extract. When the merger was announced, the company had indicated that they can extract peak synergies of $2.1 billion on an annual basis in the 4th year of it being completed. 60% of this will be on account of the operating synergies. Whether the company, the merged entity, can extract that will be the key to watch for. The other stock you should closely look at is Bharti Infratel, because what will happen once these two merged entities combine, Vodafone and Idea, there will be a lot of towers where in their presence there will be an overlap, and those sites are estimated to be about 20% as quantified by the management. So that will be rationalized. They will not pay twice the rent. They will look to shut it down. So that will impact the revenues and EBITDA of Bharti Infratel, but that should be in the price because this is not something which is new. But yes, financials for Infratel, the tower company, will also be impacted.
Okay. All right, Reema, thanks very much for that. So debt will definitely continue to be a big problem, as well as loss in market share for the consolidated entity. But as of now, we need to take a break with the news that the Midcap index is down around 0.3%. The Nifty is flat. But the big crucial trigger to watch out for will be the OPEC meet in Vienna, which is scheduled later this week.
So you've got the market, which is absolutely flat, but it's off the lows. And that's the way to look at this. 55 lower on the mid-cap, so there is still some losses there, about a 0.25% down. I mean, look at IOC, and I think it should be true for the others as well. I think we started with oil marketing stocks up 4, they're up 5.5 now for IOC actually. It's at the day's highest point. And HPBP, yeah, 6% on HPCL, and BPCL is at about 3.5%. Let's look at oil prices as well if we could quickly. I mean, I think for WTI, with the 200-day moving average is about $61 or so. And with the correction that has begun, and of course with the OPEC meeting, there are some who are saying that, well, the important price would essentially could be tested. Would we have the oil price to show? Yeah, there you go on your screen. 63.9 on WTI. Brent is at about just under 73 at this point in time. Manisha is here with exactly that. What's happening with commodities, and of course oil is the big one. Manisha.
It absolutely is. Thank you so much for that, Prashant. Well, yes, as you mentioned, you are looking at the US crude oil prices trading at around 1-month lows, and we have Brent at around 2-month lows as well, breaking below that $73 per barrel mark as well. And if you look at the last 1 month from the May highs, the crude oil prices have come off by nearly 10%. So sharp declines is what we are seeing in anticipation of what really could come in from the OPEC meeting that is in Vienna on 22nd of June. Well, as of now, there is expectation that you might see increase in supplies coming in from Saudi Arabia and Russia. They have hinted that. But then there are some other OPEC members like Iran, Iraq, Venezuela, who have actually been protesting an increase in supply. So there already is a bit of a discord in OPEC members and allies as we are headed towards that meeting. And that's not all, because on the other side, you also are looking at the US-China trade retaliation, and energy now seems to be forming a part of that as well, as China is talking about putting in tariffs on US exports there. So plenty happening, and we have seen the hedge funds and the money managers lighten their positions when it comes to the bullish positions in case of crude. So that is what really seems to be bothering. And a percentage point down on Brent and nearly 2 percentage point down in crude, US that is how we are trading at this point in time. Jonathan Bharat as well joins in for his view on what really can be expected for whole of this week, and especially from that meeting on Friday itself. Jonathan, hi, good to have you. What is your sense? What are you reading into with the kind of statements that we are seeing from the oil producers? What kind of a decision are you expecting?
Manisha, good morning. Look, I think it's we're teeing up for a little bit of a clash, I think. Let's see what how much weight Iran, Venezuela and Iraq actually have. Remembering they're trying to veto the increased supply. But I think when you really look at it, when you look at Saudi Arabia and Russia, they're anticipating, a lot of us are anticipating that they will increase production by about 1.5 million barrels. And as a result of that, the market's sort of saying, well, look, there's going to be a little bit more supply. There is that spare capacity there. So as a result of that, we're coming under pressure. But I must admit, it's under a lot of pressure at the moment, which I think is probably just a little bit overdone for Monday trading.
What is also your sense from the US-China retaliation? I mean, how much of an impact of that can we see on prices? It clearly is yet another bearish factor adding on to from the OPEC meeting. Absolutely.
I think when you look at, although $34 to $50 billion for these two great trading nations, doesn't seem to be a lot of money there. I think when you look at the US and what they're trying to target also on the energy, it does send a bit of a concern to the market about the strength of global recovery, therefore a sense of global consumption as a result of this trade war starts to escalate. So there are slight concerns there as a result of that. Let's see what actually occurs. Remember, the US has said 6th of July they'll come in $34 billion and a later $16 billion. So I think we want to see more about how that'll unfold. Remember, Trump does come out and he says these things, and then he sort of retaliates after that. So let's see really what happens around that. But I think in my mind, most of my focus will be on OPEC to see whether or not we'll get that increased production.
Oh, well, absolutely. So, both case scenarios on whether or not we do see that much of a supply come back into the market. What is your sense? Once this event is out of the way, what direction are we looking at the crude oil prices moving?
Look, I think as you've suggested, we've come off quite hard. There's no doubt about it. And there's a lot of fund managers starting to look at taking profit off the table. I think if the global demand is certainly there, prices will recover, but I don't think as much. I think that we'll see prices still remain in a range, and I think we've seen the top end of the range for this quarter, and as a result of that, I'd like to see prices come lower. The interesting thing is how the economies will perform and whether that will lead to demand. Remember, in the last couple of weeks, we've had this lead up in terms of concern. That's why OPEC's now trying to increase supply, because they obviously don't want prices too high. So I think we've found a high, but prices come back just a little bit, maybe into support, probably another 5% below from here.
So the worst case scenario is 5% below from these current levels. And on the higher side, what levels would you look at?
I think we've already got the highs in place, as I said. So I think we'd be comfortable. I think India would be comfortable if prices can come back a little bit. And I would support the fact that prices should be weaker from here, depending on those economic outcomes, obviously. But a little bit of confusion there, should see demand settle off.
Oh, absolutely. Thank you so much, Jonathan, for joining us. So clearly some good news coming in India's way from that as well. Another 5% of a decline in crude oil prices is what the markets really are anticipating right now.
Okay, all right, Manisha. Thanks very much for that. Well, important news coming in for IndusInd. A lot of banks have anyway hiked lending rates, and some of them did that even before the RBI policy. But it's IndusInd Bank which has now hiked lending rates by 20 basis points. Remember that it's a very strong retail-focused lending bank as well. They have a strong CV portfolio, which they basically have a strong part of in terms of their total loan book. So important news coming in there, where the total lending rate hike has been around 20 basis points. We'll try and get in touch with the management also to get a sense in terms of the cost of funds, etc. But that's the update coming in. Prashant?
Okay, we will take a very quick break here, and we will come back and get you an excerpt from our